Crypto Kids, welcome back to another video. And in today's video, we're going to be jumping into the price of Bitcoin, which is unfortunately continuing its reversal towards the downside. Over the past couple of videos, when Bitcoin was at its all-time high, I mentioned that there was a bearish divergence forming, and alongside the bearish divergence, volume was decreasing, open interest was at an all-time high, and usually the combination of these are not too great for the price. Mainstream media was highly euphoric. You could see on every single, popular Instagram channel, they were posting about Bitcoin. Even the big guys, Bloomberg, CNBC, there was just too much euphoria in the market, and we expected Bitcoin to drop initially to $69,000, and after dropping we did experience a short-term reversal back up. However, after breaking below the orange support range, we hit my first short-term correction target of 63.7K. Currently, we're breaking below it, and that's why I wanted to make this update video so that I can discuss what are my next personal targets for Bitcoin. But if you're new to the channel, make sure to subscribe for daily technical analysis and breaking crypto news. And if you haven't smashed up the like button already, please do make sure to do so, and that would make me very, very happy. So let's get this video to over 700 likes. That would be incredible. But jumping into the price action, like I said, Bitcoin is continuing its dump. On the last video, I mentioned that, yes, Bitcoin can drop for another 10%, 15%, 20%, but really, it doesn't matter. Why? Because Bitcoin is the same product. Whether it's at an all-time high or if it drops 20, 25%, it doesn't really matter because Bitcoin as a product, it doesn't change. Its values, it doesn't change. It still promotes liberalism. It still promotes financial freedom and ownership of your own assets. And it's still the revolutionary technology that is going to change the financial system forever. So it doesn't change no matter the price. And that's why I'm not concerned. From past couple of videos ago, I said that I'm not adding more to my long positions. We've been long since $43,000, and I've still held that position open both on the $10,000 trading challenge and on my personal account as well. What I'm now doing is I'm just DCing in with whatever capital I have in fiat and buying up more Bitcoin in every buy the dip opportunity because Bitcoin is still within this parabola. And while we're in this parabola, coming up towards the halving, which is in approximately 1 month, and it's scary that it's in 1 month only. It's pretty fascinating. I've been waiting for this for like 4 years, ever since I first started crypto when I was 12, and now it's here again. Bitcoin, ever since the previous halving, we've increased by a huge sum. As a matter of fact, we've went up by 660%. Very, very, very impressive. But what does happen usually coming up towards the halving, Bitcoin can see a 20% correction on average from the high created on the previous month to the low created on the halving month. And if we are to measure this, then that would take us down to $59,000. And what also coincides at 59K is the 7-period moving average support. So I think a final buy the dip situation could be happening at 59K, and that would be an awesome buying opportunity. That's what I'm going to tell my I'm going to tell my parents and relatives to, look, if you want to get into Bitcoin, this is probably one of your last chances. But if we do break this parabola, which I think it's still premature, then the final scenario is to come and hit the golden pocket in Fibonacci, and that's at $47,000. But I think this will happen after we see another long extended bull run. But the question is, why has Bitcoin been dropping here? Well, the reason for that is because of the spot ETF data. On Saturday, I posted on my Telegram community that I'm waiting for the data to be coming out on the market open or market close after Monday. Why? Because the total transactions, buying, selling pressure is reflected on the table, the Bitcoin ETF table, following a 1 to 2 day period after the initial buying selling is initiated. That's how spot ETFs work. They rely on a T+1 or a T+2 basis, as you see over on Twitter. And that's why, because the market started to fall on Thursday, I was expecting either on Friday or on Monday, we would probably have some net outflows that come in. And by the speculation generated from the market, because we do have these net outflows, it would be likely that Bitcoin continues its drop towards the downside. And that's what's been happening. As a matter of fact, yesterday we saw $642.5 million come out from GBTC alone, and that's been the record for GBTC ever since January 11th, which is when the spot ETFs launched. And on a global perspective, throughout every single exchange-traded product across the world for Bitcoin, we've seen a record outflow that totaled to 4.5K Bitcoin. That is huge, and most of them come from the spot ETFs. Well, here at least IBIT was positive by like $400 million. That is a great sign. If IBIT goes into the negative, then we will need to be concerned because the market will probably dump further. But what is great is that IBIT still continued sustained growth, and Fidelity was the one that started to lag behind and not accumulate as much as it usually does. And the overall data, the overall net outflow was at $154 million. The upcoming days, we still need to be very cautious because today we're seeing a drop. Yesterday we saw a drop, meaning that tomorrow's ETF data and the day after, which is going to be on Thursday, those are probably going to be net outflows. And if that continues to happen, then the market could potentially continue dropping back down. And I think 59K, that's why, like 20% drop from the all-time high, that is probably going to be a first very nice buy the dip opportunity. The thing is, right, if the price continues to rally, then the buying pressure significantly increases into the ETFs. But if the Bitcoin price declines, well, you're kind of seeing a double selling pressure that comes from ETFs, and price tends to go down faster than it increases. And that's why like the ETFs are a double-edged sword. So far, they've been working out pretty well. But the moment the price of Bitcoin decreases, then they can go the other way too. However, it's still fine because IBIT would probably not sell if it's Bitcoin that it got cheaper because they would be selling it for a loss. It depends on their risk management, and that's why probably IBIT is still seeing inflows because they do not want to sell their Bitcoin in their vaults, which is normal and understandable. And that's great for the price in the macro. But again, I think $59,000 would be a good reversal level. If Bitcoin breaks below 59K, then we can look into the range between 56 and 57.4, which is where we previously saw a little bit of a consolidation following the breakout of this bull flag back in 26th of February. And those are the levels that I'm personally now going to be adding limit orders over on Bitflex to be accumulating more Bitcoin in spot. And if you want to do the same, you can go to the description below to get a chance of winning a free Apple Watch when you sign up to Bitflex using this link here. And additionally, you'll get up to $68,000 in rewards. But yeah, so that's what I'm looking at in terms of Bitcoin. I think it's fine. The moving average, the 7-period MA, is supporting at 59K. The only time where I'm going to be worried and probably entering into short positions, because even though in the short term, Bitcoin is in a bearish trend with lower highs and lower lows, in the macro, the Consensio, so 3, 7, and 30-period moving averages are still heading up, and the trend is very much bullish. And I don't like to short Bitcoin when the trend is bullish. It doesn't tend to work out very well. So until the 3 and 7-period moving averages cross into each other, I'm not going to be looking into on derivatives shorting Bitcoin. But will I sell my Bitcoin holdings on spot? No, and that's the key differentiation to make. If we go into Ethereum, Ethereum has been seeing a pretty big hit actually. Again, in my Telegram community and in my videos, I've been mentioning that I'm selling Ethereum when it hits 3.55 and when it hits 3.950. I sold the majority of them when we had 3.55. I invested it into different crypto startups and different altcoins, which also have been bleeding. Yeah, the entire market is going down at this moment in time, but I've sold off all of my positions between 3.5 and 3.950, mostly weighted at this level here. But Ethereum is corrected down to 3.2. We bought Ethereum at 2.1, 2.2 here on the channel after seeing a retest to this ascending triangle's prior resistance level. Where do I think Ethereum will go? Well, potentially lower. Why? Because we had some breaking news with Ethereum and their spot ETFs, and it's not great. So Eric Balchunas and James Seyfarth, which I'm hoping to have on the channel sometime this week or next week, they mentioned that they're pretty bearish on these spot Ethereum ETF approvals. If we go over into this tweet here, Fidelity updated their filings for the spot ETFs. However, James Seyfarth is saying that Fidelity is not giving up on Ethereum ETFs, and they're not giving up on the SEC, allowing them to stake within the ETF. Our base case is still that these ETFs are not going to get approved, at least on the May 23rd deadline. He is saying, though, potentially at some point it will get approved, maybe in the next 2 years. But both Eric and James are saying it's premature for an approval for Ethereum, and likely we're not going to be seeing it. And once we do come up towards the May 23rd deadline and we don't really see anything going on with the ETFs, that's probably going to indicate a further dump on Ethereum, maybe even back down to the 2.2, 2.1K level. If that were to happen, that would sidetrack the entire crypto cycles completely, because what happens is Bitcoin pumps, we see that consolidation, Ethereum pumps and overtakes Bitcoin in terms of returns, and then finally, there's altcoin season, but we're not obeying any previous history at all. And that's kind of giving me the worry with altcoins. I think altcoins will pump the more that retail comes back in. And from various data, we know, as actually from even my own YouTube data, we can tell that retail is coming back into crypto. And that's why we saw meme coins surging by a significant amount. Like meme coins, Dogecoin, Shiba, they went up. Why? Because there's a community for them. And retail is the main community that we see for these meme coins. And that is also a huge, huge signal that meme coins or retail is going back into crypto. So that's a good sign in the macro. But in the meantime, Bitcoin went below sub $63,000. After this video, I'm just going to be buying some more Bitcoin. Like, it's an addiction at this point. The more you go into the rabbit hole of Bitcoin, you understand why it's the exit strategy and why it's the ultimate hedge against inflation. And we can see, like, in the macro as well, Bitcoin's the same product. We still have some very bullish news about it. As a matter of fact, 54 minutes ago, the world's largest $1.43 trillion pension fund in Japan looks into adding Bitcoin to its portfolio. And look, people are ignoring how bullish overall what's going on. And, the market can correct 20%, 15%. It doesn't really matter. What happens is, what matters the most is Bitcoin in the macro and what's going on with news and what's going on with portfolio managers and wirehouses. Are they accumulating Bitcoin? Are institutions getting in? And the short answer is yes, they are buying Bitcoin. And also 14 hours ago, Eric posted this. Only a handful of advisors have allocated to Bitcoin ETFs, but the average allocation was 3.5%, according to Carson Group, one of the biggest advisory firms. So 3.5% is the only allocation. This will increase over time. And it's just going to be a matter of patience. And this is a very good chart. In terms of a parabola, whenever Bitcoin's in a parabola, every time we experience a 20%, 40% correction even, that's a time to be accumulating more and more Bitcoin. I just got access to the Bloomberg terminal. I'm going to be sharing it more often in my videos very soon. But for today, I want to share this data with you. When I joined crypto, actually when I started my YouTube channel, that was the 14th of December in 2021. And one of the most profitable and actually the least complicated strategies to have followed ever since December of 2021 was to just buy and hold Bitcoin. You can see that data there. If you were to just buy and hold Bitcoin, that tends to be the most profitable thing to do. Accumulation and compounding your Bitcoin holdings can be very much powerful, and that's the same thing that MicroStrategy follows, and that's why he's super, super successful, Michael Saylor, and that's what I'm continuing to do. And the final thing to mention before I end off this video is that tomorrow we're going to be seeing the FOMC data being released, and that's going to be important. 10 p.m. GMT plus 4 time. I'll try to live stream it, but if I can't live stream, then I'll make definitely a YouTube update, a Telegram update, which you can join for free using this link in the description below. But that's going to be important in terms of where they're expecting the rates to drop to. We can see that there's a 99% chance that the interest rates will still remain at 5.25 to 5.50. We saw on the Fed minutes that, look, inflation is still very much away from 2%, and they're going to do their best to bring down inflation to 2%, meaning they'll either there'll be rate hikes, which is highly unlikely, but they could surprise everyone, or they'll just keep it at 5.25 to 5.5% until we see a drop to 2% inflation. But the issue is, even with high interest rates, inflation is not dropping. As a matter of fact, like the CPI increased from 3.1% to 3.2%, meaning that these rate hikes are not sustainable. It's not doing much. We can look at rent inflation, which is incredible levels. Service inflation, incredible levels. It's just not looking too good. Core CPI is dropping. That's a great sign. But until that reaches 2%, I think we still need more rate hikes to be coming in. And once that happens, economies are going to be weakening. We saw in Japan, one of the most stable countries in terms of their economies, they introduced rate hikes for the first time in 17 years. For the first time since 2017 or 2007, when I was born, they introduced rate hikes. And that's not a great sign for the global economy overall. And if global economies deteriorate, then assets like gold and silver will increase. And now that Bitcoin is considered as a commodity and a hedge against inflation, I think the same could be happening to Bitcoin as well. And finally, Bitcoin is back down as the 10th largest asset in the world. Briefly, we were at number 8, but now we're back down to number 10. Ladies and gents, thank you so much for watching this video. Again, smash up the like button if you've enjoyed it. But that's it for me today. See you very soon. Bye-bye.